Hi, I'm Adam Sussman, Director of Research at TABB Group, here with Matt Simon, Analyst at TABB Group. And we were talking the other day about portfolio algorithms, and then we kind of got into talking about customized investment funds, and I think we found some interesting connections between the two. But I wanted to just start off talking about portfolio algorithms. I think we've seen some recent announcements from firms that have launched some new products in that space. We worked together with MISME that was trying to launch a portfolio-based crossing network a year or so ago. I mean, at the heart of it, what's the interest in portfolio-level trading?
I mean, I think one of the things that we saw is that, one of the announcements is by Morgan Stanley. They came out with a list-based algorithm. And really what they're trying to provide to the marketplace is a better solution for trading a basket of securities. Right now, a lot of the solutions that we've seen up to this point over the last few years have been really focused on trading single stock. And many of the algorithm solutions are on the single stock basis. But when you look at it from an investment level and you look at portfolios that portfolio managers are trying to manage, and when they're handing over their decisions, especially with some of the more recent ETFs and some of the other ones, you're really trying to get into some deep dives in terms of sectors and managing cash and managing all kinds of things that actually the risk parameters are not just on the single stock level. You have to consider the entire holistic basket.
Right. And then we were kind of talking about these customized investment funds where I guess this came out of the whole, blow up of the target date funds. They didn't really do what they were advertising that they would do. People were in like a 60-40 stock bond split, and they're trying to become more conservative, and they just lost their retirement. So there's some pressure to create a better product. But you had I guess you were reading about some other newer takes on that.
Yeah, man, I saw that there was an interesting article on customized funds, which is this idea of actually having a better active management of these target date funds, which, as you allude to, didn't perform as well in the crisis, and actually some of them have found that didn't actually do so well when you've actually been going from stocks to bonds to different asset classes. And so these more customized products are about trying to incorporate more parameters into the target solution. So being able to understand salary requirements, being able to understand when the year that you're actually going to, a lot of the target date funds went by a decade. So they went 2010, 2020. This would actually look more specific and say, okay, this person's going to age 65, they're going to be retiring, their salary is this, it's going to adjust by this amount over the years, they can expect to receive a bonus. So there's a lot more parameters involved. What that means for this whole portfolio-based trading idea is that there's going to be more investment managers looking to get into these types of products, and they're going to be trading more on a basis that's going to require more securities, more trading, more everything involved.
So at what point do you think that the portfolio algorithms mature and our ability to take in individual level risk parameters evolve to a point where Adam just could take that piece of software, type in my stuff, execute through an agency broker, and I've basically just cut out the investment manager, right?
I mean, I think it's an interesting question. I mean, I think there's going to be some fiduciary responsibilities that people are always going to look to managers. There's some interesting platforms that have been unveiled in the marketplace over the last couple of years. Tax-based and tax a lot accounting has been a big part of that. And I think if you can get into some of the specifications on trying to get to that point, I think that we're going to be covering some interesting new ground here. But I don't think that individuals are going to be taking over the management of their money all so fast. I mean, I think you're still going to go back to a wealth management company or somebody who has a better specialty in understanding what you're looking to achieve.
Right, but it does seem like between managing the risk, creating the portfolios, especially if we're talking about, like you said, I think a basket of ETFs, for example, down to the execution, that the software is getting to a point where more of these things, that the passing off between these different functions is becoming more fluid, right?
Yeah, I mean, it looks like that we're transitioning to this world where the investment managers have a better understanding of what the investor is looking for, what the investor wants, and what's going to meet their objectives between risk and return.
And then how to execute that almost in an automated fashion.
Right, and then being able to then transition that from the buy side to the sell side and get those trades executed appropriately.
Excellent. Good stuff. Well, like I said, this was Matt Simon, analyst at TABB Group, Adam Sussman, Director of Research, and thank you for joining us.